Oversea-Chinese Banking Corporation Limited, or OCBC for short, is the second of the three Singapore banks to release its financial results for the second quarter and for the first half of the financial year 2024 ended 30th of June early this morning. For information, UOB was the first one to release its financial results yesterday morning, and you can find the link to my review on the bank's results in the video description below. DBS will be releasing its results next Wednesday evening. In this video, you will find my review of OCBC's latest results in terms of its financial performance, key financial ratios, as well as its dividend payout to shareholders. Before I begin, a quick introduction about the bank. Here are two facts that many of you might not know. First, OCBC is Singapore's oldest established bank. Second, it is currently the second largest financial services group in Southeast Asia by assets. Currently, the Singapore headquartered bank has a global network of over 400 branches and representative offices across 19 countries and regions, with its key markets being Singapore, Malaysia, Indonesia, and Greater China, which comprises of China, Hong Kong, Macau, and Taiwan. Let us now take a look at OCBC's financial results for the second quarter of the financial year 2024, compared against its results last year. As you can see from the table above, it is a stable set of results, where its net interest income, net fee and commission income, other non-interest income, as well as its net profit attributable to shareholders all recorded improvements. Particularly, the 1.7% improvement in its net interest income is due to a 5% increase in average assets, partially offset by a 0.06 percentage point decline in its net interest margin from 2.26% in the second quarter of the financial year 2023 to 2.20% in the second quarter of the financial year 2024. Net fee and commission income was up by 8.4% due to robust fee growth. Other non-interest income jumped by 15.3% as a result of growth recorded in its trading and insurance income. Finally, its net profit attributable to shareholders rose by 13.7% as a result of a higher total income, along with lower allowances, as well as amortization, tax, and non-controlling interest. Next, let us have a look at OCBC's results for the first half of the financial year 2024 compared against its results last year. Just like its results for the second quarter, it is also largely a stable one, with improvements seen in its net interest income, net fee and commission income, and other non-interest income, as well as its net profit attributable to shareholders. OCBC's net interest income climbed by 3% to about 4.87 billion Singapore dollars, a new high for the bank. This was led by a 5% growth in assets, largely driven by an increase in high-quality assets, which were income accretive. Net fee and commission income was up by 7% due to a 19% increase in wealth management fees from strong momentum across all wealth channels from an increase in customer activity. Other non-interest income jumped by 20.8% due to higher net trading income, which was up by 28% to 726 million Singapore dollars, and a new high, along with a 17% increase in insurance income as a result of a strong performance from the bank's underlying insurance business. Net profit attributable to shareholders grew by 9.4% to about 3.9 billion Singapore dollars, another record high for the bank. Moving on to OCBC's key financial ratios, there are three I will be focusing on in this slide: its net interest margin, return on equity, as well as its non-performing loans ratio. For starters, net interest margin is the difference between how much the bank earns from its lending activities and the amount it pays out on deposits and other borrowings. Return on equity is a measure of the bank's profitability, particularly how much it is able to generate for every dollar of shareholders' money it uses in its businesses. Last but not least, non-performing loans ratio is a measure of bad loans. You will want this ratio to be as low as possible, as a high non-performing loans ratio may be a sign of financial trouble for the bank. Looking at OCBC's key financial ratios reported for the second quarter of the financial year 2024 compared against the first quarter, two things to highlight. The bank's net interest margin fell by 0.07 percentage points to 2.20%. mainly from growth in lower yielding high quality assets and tightening of loan yields alongside market rate movements. Non-performing loans ratio continued to trend downwards from 1.0% in the previous quarter to 0.9% this quarter due to a 4.6% decline in its non-performing assets. Similar to UOB, the management of OCBC declares a dividend payout to the shareholders on a half-yearly basis, once when it releases its results for the first half of the financial year and once when it releases its results for the second half of the financial year. For the first half of the financial year 2024, a dividend payout of 44 cents per share was declared, which is a 10% increase from 40 cents per share paid out last year. Its latest interim dividend payout represents a payout ratio of 50%, in line with the management's guidance. If you are a shareholder of OCBC, do take note that the bank will go ex-dividend on 12 August, with payout date on 23rd August. Personally, I am impressed with the bank's record-breaking performance for the first half of the financial year 2024, where its net interest income, net profit attributable to shareholders, customer flow treasury income, as well as its wealth management income all saw new highs. Its results for the second quarter of the year is also a very stable one, with its net interest margin, net fee and commission income, as well as its other non-interest income, saw year-on-year improvements, resulting in its total income recording a 5% growth and its net profit attributable to shareholders climbing by close to 14%. Another thing to highlight is the further decline in its non-performing loans ratio compared to the previous quarter 3 months ago to 0.9% due to a further 4.6% drop in its non-performing assets. Finally, the 10% rise in the bank's interim dividend payout to 44 cents per share is certainly pleasing news for the bank's shareholders. As a shareholder of OCBC, I am very happy with the bank's overall performance. With that, I have come to the end of my review of OCBC's latest financial results for the second quarter, as well as for the first half of the financial year ended 30th June. If you find the review useful, I would greatly appreciate it if you can give this video a like and consider subscribing to this channel so you will not miss out on any of the videos I will be publishing ahead. Thank you for watching, and I look forward to talking to you again in the next video.